Hello, this is the lecture for Friday, September the 4th. We'll be discussing reversing entries and special journals. So, you probably haven't done reversing entries before. We did not do them in 2301 here, so I doubt that you have seen them. If you recall, at the end of a period, actually let me go over here to Excel. Just let me move this. We're going to work that out later. Okay, so at the end of the period, we have some adjusting entries. And let's say, for instance, that we accrue salaries, right? So we had our wages, we'll call it wages. So we had wage expense and wage payable. All right, let's further assume that we did $3,000 on this day. It was a Wednesday, and our weekly payroll is on Friday, and it's $5,000 a week, right? So we had to accrue 3 days worth for $3,000. So this was on December 31st. Then when we turn around on January 2nd and we do the normal payroll, remember we have to do wage expense for just the 2 days in the new year. We have to do wages payable for the 3 days. We're paying this up here now. And then finally the cash is coming out the door for our normal $5,000 a week. All right, no big deal. It seems fine. The problem is that many times these adjusting entries are done by an accountant, whereas the daily transactions are done by a bookkeeper. And the bookkeeper may not be aware that we did this up here. So, oftentimes, the bookkeeper will make the following entry, the following incorrect entry. This is on January the 2nd. A lot of times they'll do what they normally do, and they'll do wage expense and cash for $5,000. Okay, now if they do this, if this happens, then expenses, oh my gosh, in the new year are overstated by $3,000, and liabilities are overstated because the $3,000 payable, 3,000 wages payable is still on the books. Okay? Now let's go back over here. All right, so these reversing entries are optional. And basically what a reversing entry does is it reverses an adjusting entry. So on January 1st, you would reverse that entry made on December 31st, and then the person that records the journal entry on December 2nd can do it like they've always done it. Okay? And I'll go back and look at that on the other page in a minute. But here are the types of adjusting entries that are reversed. All right, so you need to pay attention to this. I'm just going to make it red. All right, if they're accruing revenues or accruing expenses, those may generally be reversed. If they're deferring costs by recording them as a prepaid expense, and then it's going to be consumed in the next period. All right, and if it's deferring revenues for prepayments by customers by recording them as unearned, and they'll be earned in the next accounting period. So let's look at some examples. All right, so this one was an adjusting entry for interest receivable and interest revenue. So they accrued interest revenue. Then everything was closed out. All right, if they don't make a reversing entry, then when they actually pay the note off, they need to make sure and only record interest revenue for the current period, and then this interest receivable is credited for the amount that was recognized at December 31st. But remember, that was 2 months ago that we did this up here. So they might forget that that happened. However, if you reverse it, right, notice the reversing entry is the exact opposite of the adjusting entry. If you reverse it, then when you pay the note, it's just the cash coming in. Actually, the note's getting paid. It's note receivable. The cash is coming in. You have the note receivable for the amount of the note, and then interest revenue for the whole entire thing. Okay? It nets out to be the same in the new year because I debited interest revenue for 66, and then I credited it for 99. So I'm only going to actually have $33 in interest revenue, which is the same as what I had over here. Okay. So basically, this is the reversing entries are done mainly if the accounting record is going back to like a bookkeeper who may not know that this adjusting entry was done. Okay, so when you come back over to here, oh, wrong one. When you come back over here, if I use a reversing entry, you would have a couple of things. On December 31st, you would accrue the wages, and wage payable for the 3. All right, this is to accrue wages. You would close the books like normal, also on December 31st. All right, then on January 2nd of the new year, you would do wage payable and wage expense, and all this would be done before you send the books back to the client. All right, and then the bookkeeper can make the normal payroll entry on January 2nd. The bookkeeper can just go wage expense and cash for 5. All right, only 2,000 of it is actually an expense this year, but if you look under, if you were to look at a T account for wage expense in the new year, okay, when we reversed it, we credited wage expense for 3,000, then we debited for 5,000, and at this particular point, my net wage expense is $2,000. Okay, which relates to the 2 days in the new period. All right, so let's do an exercise on that. I didn't leave myself enough room. Let me move this. Okay. All right, so this is exercise 13, which is reversing entries. I typed out the information, so you've already got it. If you don't have a book, this is what was given. All right, so on December 31st, Kellen's company made the following adjusting entries for its annual accounting period. And these are the adjusting entries. They did depreciation expense, interest receivable with accrued interest. They adjusted prepaid rent, and then they also, I don't think this is right. This one should be interest payable. I'm losing my mind today. Okay, and they recorded some interest payable. They accrued some interest expense. Okay, so the first one, should we adjust or reverse this first adjusting entry? All right, no. Don't reverse this one because nothing will be recorded with respect to it next in the new year. Okay, you don't ever reverse appreciation. This one I can reverse. Okay, I'm going to receive that interest this in the new year, so I can reverse that one if I want to. So yes, can be reversed. And its reversing entry would simply be interest revenue would be debited and interest receivable would be credited for the 500. All right, rent expense and prepaid rent. Okay, this one kind of depends. And it depends on if this finished this off. Okay, if this completely finished off the prepaid rent, then no, I'm not going to want to reverse it. But if I have, actually, I'm not going to want to reverse this one at all. So I'm going to say probably not. This one, yes, can be reversed. And it would be interest payable and interest expense. All right, I want to talk about this prepaid a little bit more. Okay, if you remember on that longer one that we did, what was the one I did in the car? Problem 2. Okay, so it was. So this is from problem 3-2. One of the things that they did on February 1st is they paid $3,600 rent in advance. And it was 1 year's worth. Okay. And then we did it, so it was $3,600 divided by 12 months. That was $300 a month. And February, March, well, 11 months. 11 months have gone by. So 300 times, oops, what happened there? 300 times 11. 3,300 should be rent expense. And they should have 300 left in prepaid rent. Okay, so remember that from problem 2? All right, what they did on February 1st, here's what we ended up doing. All right, on February the 1st, they did rent expense for the whole $3,600, and then prepaid, and then cash out the door. Okay, that's what they did on February 1st. So when we did the adjusting journal entry on December 31st, we had to take $300 out of rent expense and move it into prepaid rent. Okay. This is the type that can be reversed because this is actually going to be done next year. Okay. Or I can just put it back in expense because it needs to be an expense next year. So I can turn around on January 1st and say rent expense and out of prepaid rent. And then I won't have to worry about it next year when I'm doing adjusting journal entries. That one will already be taken care of. Okay, I think that is good for that. So I am going to exit out of this, and I'm going to do another video for special journals, which is the last little bit of chapter 3.